Anastasia, was that a communication error or just a communication difference that we're not used to?
I think it's a communication style that is quite different from what we've been accustomed to. The markets are not used to hearing individual policymakers say, this is my opinion, and in this case, the markets are reacting to that. But I do think that in speaking for himself, he's also in part speaking to the committee, because we can't deny the fact that economic projections need to be revised higher to take account of what happened in December. And I will say broadly, for example, the CBO has not actually revised, fully incorporated the expectations of tax reform into their forecasts just yet either. So we're still waiting on that. So I think there's upside to those estimates.
George, why open the door to a conversation about 4 hikes in 2018 in your first testimony as the Fed chairman? Why do that? What's the risk reward there?
And ahead, as Anastasia is correctly pointing out, that and ahead of the actual FOMC committee, which that's really where the policy gets codified. So it's interesting. I think it is a style thing. It's a personal thing. I mean, he's very optimistic on the U.S. economy, it appears, and obviously for the right reasons. Now, I think it's really trying to kind of steer the market in the right direction. We were kind of surprised in the bond market. Markets actually have 3 hikes already basically priced in to kind of nudge us towards 4. Is that where he's trying to move us towards? We'll see.
Well, I thought it was objective say nothing, Scott Wren, and for most of that testimony it was. It was literally this one line about his enthusiasm now versus December. Do you think the market's got a little bit of ahead of itself? Do you think the South Side and all these notes that have come out about 4 hikes in 2018 are getting a little bit ahead of themselves as well?
I think it has, John, because really if you look at the equity market, it took a long time last year for the equities to come to grips that, yes, we are going to have 3 rate hikes. We argued all year long that 4 or more is a headwind. We're looking for 2.9% GDP. I think the Fed needs to be careful here because, of course, the worry is you're coming from a 10-year monetary policy experiment and you're raising rates, and that usually in a normal cycle is not smooth.
Anastasia?
So it's interesting, though, because I don't see 3 or 4 rate hikes being a headwind for equities because, you know, we've done a lot of thinking about this and said, look, the interest expenses are not going to rise dramatically for corporations because of this. If you look at the weighted average maturity on S&P corporate debt, it's about 10 years, and only 11% of that is floating. So it's not like that's going to be an immediate headwind. And then also, if the expectation is, well, maybe the risk reward is now favoring fixed income, I would argue that at 2.9% Treasury or in 3.5% Treasury, we're not quite to where the earnings yield is on the S&P 500, which, by the way, rose after we've had the pullback that we've had. So I'm not quite there with you that this is an immediate headwind to equity.